Welcome back to the Daily Stack. Today, it's September 23rd, 2025. This show, it's not financial advice. If you think it is, you probably also let your cousin who discovered crypto last week manage your portfolio. Bro, put the whole 401k into hamster coin because the mascot looked bullish. Don't do it.
Woke up early, charts in my face, caffeine buzzing, I'm in the race. Bitcoin stacking, digital chase, wallet so fat, it's a data case. Meme coins wild, the circus sack, dojo on the rocket, facts on facts. Buy low now, my balance intact, ledger on lock, no hack and crack. Stack it up, stack it up.
Market mayhem, $1.7 billion goes poof. Let's start where everyone's eyes are glued today, the sell-off. Bitcoin slid roughly from $116,700 down to the low $111,000 in just a few hours. Ethereum dropped harder. Altcoins, some of them went full cliff dive. If you opened your portfolio this morning, chances are it looked like someone left your gains on the grill too long. Charred, crispy, and gone. Let the numbers tell the story. About 1.5 to 1.7 billion in leveraged bets gets liquidated in a single 24-hour stretch. That's a wipeout of epic proportions. Not some small retail crowd getting stopped out. Big money, institutional money, gone. Here's how it works. Leverage is like borrowing chips at a casino. You put $100 of your own down, borrow $900 from the house, play with $1,000. If you win, great, you pocket the profits. But if the tables turn, the house doesn't want to politely wait for repayment. It grabs your $100 instantly, and you're left with nothing but memories of those chips. That's liquidation. Once a wave of them starts, it snowballs. One trader gets wiped, they're forced to sell, which pushes prices lower, which wipes out the next trader, which pushes prices even lower. It's like dominoes with dollar signs. And yet, because this is crypto, there's always a weird side plot. While the majors bled, coins like OG and Aster pumped. Imagine two people breakdancing on the Titanic deck while everyone else scrambles for lifeboats. That's crypto for you. There's always at least one chart that refuses to obey gravity. So why did this particularly flush hit now? One name, Jerome Powell. His words have become the thermostat for global risk. A few sentences from him can send billions sloshing around like water in a storm surge. Think of money as water behind a dam. High interest rates are closed gates. The water stays trapped in a safe place. Bonds, savings accounts. Those rates drop and the gates creak open. The water rushes out looking for yield. So where does it go? Stocks, real estate, crypto. Here's where things stand now. Fear is high. You don't see 1.7 billion flush without nerves fraying. Liquidations remind everyone that leverage is a double-edged sword. It cuts quick and cuts deep. But analysts are already calling this a healthy correction. Why? Because when everyone's over-leveraged in the same direction, the market gets top-heavy. It's like trying to balance way too many plates on one stick. Eventually it wobbles and crashes. A flush resets the balance. So yes, portfolios look bruised today, but in the big picture, it clears space for a sturdier rally. Across the pond, the Transatlantic Task Force. While traders are glued to the charts, regulators are moving pieces that matter for the long game. The big headline, the UK and US just teamed up on a joint task force for financial regulation. They're calling it the Transatlantic Task Force for Markets of the Future. Sounds like a Marvel spinoff that nobody asked for, but the implications are serious. For crypto, regulation has been one of the biggest barriers to adoption, not volatility. Institutions can handle volatility. They've been trading commodities and frontier markets forever. What they can't stomach is unclear rules. This task force is meant to fix that. Over the next 6 months, they'll hammer out recommendations that align approaches across from both sides of the Atlantic. If successful, it means less confusion, more certainty, and smoother entry for institutional players. The UK's own moves. And the UK isn't waiting on Washington. Their regulator, the FCA, is trying to make their financial system friendlier. First, they're working to speed up registrations for crypto firms. No more 5-year-long queues that kill startups before they launch. Faster approvals, quicker pathways to operating legally. Second, they're proposing something spicy. Exemptions from the same broad principles for business rules. In plain English, the FCA is saying crypto firms won't necessarily be bound by the same catch-all standards as banks. It's like act with integrity or put customers first in the old-fashioned sense. Now on paper, that sounds insane. Headlines practically write themselves. Crypto firms exempt from integrity. Meme fuel for days. But this isn't to invite scams. It's to create rules tailored for new industries. Still consumer protection, but without cramming square pegs into round holes. It's regulators saying, okay, we get it. Crypto isn't traditional banking. Let's not strangle it with outdated requirements. Why it matters. So let's zoom out. On one hand, short-term story is messy. Liquidations, Powell jitters, portfolios in pain. On the other hand, the long-term story is clarity. Regulators in two of the biggest markets are finally saying, let's sync, let's streamline. Let's stop pretending crypto is just a passing fad. The combo, short-term chaos and long-term structure, is basically crypto in a nutshell. One chart screams red candles, the other headlines point towards mainstream adoption. It's the push and pull that defines the space. And that brings us to the tip of the day. Don't gamble on central bankers with high leverage. Powell is not your friend, and he doesn't care about your position size. When he talks, algorithms and funds react in milliseconds. If you're levered up, you're just chum in the water. Remember, in crypto, patience doesn't just protect your capital, it's often the edge. So that's the breakdown for September 23rd. 1.7 billion liquidated. J. Powell's speech is the hinge point for short-term price action. The US and UK are teaming up on regulation, and the FCA is loosening its grip to make the UK friendlier to crypto firms. Short-term fear, medium-term suspense, long-term clarity. That's today in crypto. Only ever click the official hardware link in the episode description. Skip Discord promos, Twitter DMs, or meme giveaway hypes. Your keys remain sacred. Stack smart, stack daily, and I'll see you DJs tomorrow.
Crypto groove. Clap it up, clap it up. Feel that move. Dance with the digits, make it smooth. Stack it up, stack